Hey, this is Matt from InvestiQuant. Today is Friday, December 11th, 2020. And as I'm looking at the markets here in the overnight session ahead of the open, I'm seeing some pretty weak action here in the S&P specifically. The S&P has a good amount of range taking place already. We've got 46.5 points of range in the overnight session, and that is quite a bit larger than what we've been seeing in our average true range. So we've got wide ranges happening in the overnight session, and it's happening to the downside. So we've opened near the top portion of the range. We're currently trading a little bit closer to the bottom portion of the range, and we're doing so with a wide range that's been formed in the overnight session. So I figured we take a look at that pattern, just what has happened in the overnight session, and see what that has led to historically. So we're going to be looking at the S&P specifically for this one. The setup is going to be based upon entering the market at the open as a long. The exit will be getting out of the market at 4:15 p.m. Eastern Time. The opening filter we're going to use for this is gapping down. I'm not going to put anything more specific than that. I'm just going to do opening below the prior day close. And then I'm going to go into this overnight filters section, and I'm going to describe the price action that I'm seeing right now in the overnight session. And I'm going to do it fairly simply. And I'm going to say that the open of the overnight session is in the top half of the overnight range. So I can do that right here in the overnight open versus overnight range. If I hit equals next to overnight open and top half of the range, that'll mean that the open is in the top portion of the range. And then I'm going to say at the open, we are trading in the bottom half of the overnight range. So I can grab that by using the close of the overnight, which is basically the open of the regular trading hours right there at 9:30 a.m. Eastern Time. I'm going to say that the overnight close is in the bottom half of the intraday range. And then lastly, I'm going to add that aspect of we're seeing a wider range than what we would normally be seeing in an overnight session. And to do that, there's several different ways that you can do it. I'm going to use the overnight range is greater than 100% of the 5-day ATR. So currently our overnight range is 46.5 points of range. Our 5-day average true range is about 33 points. So we're well over that. And then lastly, I'm going to put it in a similar environment. I'm going to define that as above a 200-day simple moving average, but below a 10-day simple moving average. And yesterday we did close just a little below the 10-day simple moving average, just a few points. So we're kind of close to it. And you might want to keep that in mind as you look at this. And now I can hit view results. And here we go. So these are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. When you gap down following an overnight range that has a large range, greater than 100% of the 5-day ATR, the open of the overnight session is in the top half of the range, and the close of the overnight session is in the bottom half of the range. And this is taking place below a 10-day moving average, but above a 200-day simple moving average. Historically, we've got 55 samples here in the S&P, and that dates back to 2003. That's where our data is going back to. The win rate on these for going long at the open is just 40%. And the average win to average loss is heavily skewed towards the average loss. So the average loss is quite a bit larger than the average win. Now, when I was selecting those indicators, I said you might want to keep in mind that we closed just below the 10-day simple moving average. If you look at the same pattern above a 10-day simple moving average, the exact same thing, the win rate does go up quite a bit. However, the average win to average loss still stays the same, where the average loss is quite a bit larger than the average win. So for me, that's the bigger takeaway from this study. It's not necessarily that this setup has a beautiful looking equity curve with a really weak win rate and a large average loss. It's that, both of the scenarios above and below the 10 have really large average losses compared to average wins. So you can build that out on your own if you'd like to. You just need to change the indicators to make that above a 10-day simple moving average. But hopefully you found this helpful. Good luck, and we will see you next time.